Infinite banking is a financial strategy that's really growing in popularity right now, and it's really often misunderstood. So we always get questions like, what is infinite banking? Or how does it work? Or what are the fees involved? These are really common. And this video here today, I'm going to answer a bunch of these questions in detail. Hi, my name is Laurent Munier, and I'm a partner and advisor here at Safe Pacific Financial, and we help Canadian business owners to better to hold on to and grow their wealth and then eventually pass it on to their family. So let's start with number one question. What is infinite banking and how does it work? So at its core, the infinite banking strategy leverages the cash value inside a participating whole life insurance policy to create your own personal banking system. Now, how does it work? Well, here's how it goes. Step one, you pay your premiums into a specially designed whole life insurance policy that's designed to maximize the cash values early on and through the life of the plan. These premiums go into, one part goes into the actual life insurance that you get, and the other part goes to grow the cash value. And so the second part here is the premiums are invested by the insurance company. So the cash value grows by earning a dividend that then gets reinvested into the policy, which buys more insurance, which gets you a higher dividend, which gets reinvested into the policy, which buys more insurance, and so on for the rest of your life. Then over time, the cash value of your policy grows, and this creates a pool of accessible funds that you can use for whatever you want. Generally here at Safe Pacific, we are coaching people to use this money to invest either back into their business or into other things. You'll see other videos online that talk about infinite banking, and they talk about using this money to just spend on stuff, which you can also do, but we work with business owners who generally want to invest. So how do you access this money? So you access the cash values through policy loans, which allow you to use the money without interrupting the growth inside the policy, right? So unlike a traditional bank account, using the infinite banking concept, it allows you to access your money without a credit check, and the cash value that's in your policy continues to grow even when you borrow against it. So what are some of the benefits of the infinite banking concept? Well, there a wide range of benefits, really. So this makes it a unique tool for building and managing wealth. So number one, and this is a big one, it's the access to the self-funded capital. So you can borrow money directly from your policy without having to go through a bank or a lender. This means there's no credit check, there's no loan approval process. You just ask for the money and you can access your funds anytime you need it, as long as there's cash value inside the policy. Number two, that these loans are tax-free. So policy loans are almost always tax-free in Canada, provided that they remain below what's called your adjusted cost base, right? So you'll see other videos from infinite banking practitioners in the United States that say that the policy loans are always tax-free, and that's how it works in the US. In Canada, it's different. They're not always tax-free. They're tax-free for most of the time, but then they do become taxable once it reaches a certain point and your loans are bigger than your adjusted cost base. And that's why you need to work with a professional that knows what they're doing, that does this all day, every day, so that we make sure that you stay on side and that you never create this tax. So this creates an advantage over traditional savings and investment accounts, where in order to use the money, you need to withdraw. And this can trigger taxes, might also trigger penalties, but also when you withdraw the money, it's no longer growing for you. So those are three kind of negatives of using like an investment policy or like a savings account instead of using an infinite banking policy. And then third, huge estate planning benefits, right? So the death benefit on these whole life insurance policies is paid out tax-free to your beneficiaries in Canada. And if you're doing this inside your corporation, it pays out tax-free to the corporation. It creates a capital dividend account, which then can flow to the beneficiaries of the corp in a tax-free way. Life insurance payouts in Canada happen quickly. So when people pass away and they want to transfer stuff to the next generation, usually that'll go through a will. And a will needs to go through a process called probate, which goes through the courts, which could take months or years for whoever your beneficiaries are to actually receive the money. And that's if everybody likes each other. If there's fights inside the family on who gets what, then add a lot of time on that and it'll add a lot of cost. Life insurance pays out to the beneficiaries very quickly, and it pays out directly and privately. So we've delivered life insurance checks to, clients of ours that have passed away. And, we'll get those checks usually within 7, 10, 14 days of, sending the death certificate to the insurance company. So it pays out very fast and can help to pay for all of the other things that need to happen on an estate, like a funeral or taxes, or continue paying a mortgage on a house, or paying bills like heating or kids going to school or car payments. Whatever you need to do, you need money when people die, and you don't want to wait 2 years to get it. Another big advantage is that you can grow, use, and pass on your wealth, right? The policy grows in a tax advantage way while you're alive. You can use the cash value for investments or for expenses or for emergencies while you're alive. And then when you do pass, you can pass your wealth onto the beneficiaries in a tax-free way that can create a huge legacy for however you want to set that up. So now these are all great things about why you should do the infinite banking concept. What are the risks? What are the downsides? Why shouldn't you do this, right? So it does offer significant advantages, but it's not without the risks. And we definitely want to talk about this, right? So the first thing, this is not a strategy for everyone. Infinite banking needs you to have a strong savings habit and a consistent cash flow. If you're struggling financially, or if you're living paycheck to paycheck and you're not saving as a habit every single month, this is not the right strategy for you. We do get, and this is, I guess, where kind of financial information on the internet is maybe a little bit too much, where there's some people selling this strategy to everybody and saying this is the best thing since sliced bread and everybody should have it. And then we get people who are in a really bad financial situation that should never even be thinking about this until they get other things sorted out in their lives. But really, if you're not saving consistently now and you don't have a consistent cash flow going, don't do this policy. Even if you don't come to us and you go to someone else and they tell you you can do it, please don't do it. This is a little bit of a complex policy setup. So to set this thing up, the policy needs to be structured correctly to maximize the cash values. And most financial advisors do not set them up in the right way for infinite banking. And why is that? Well, they're not taught to set this thing up, right? So the way that we're setting this up is actually kind of 180 degrees the opposite of the way that a traditional financial advisor is taught to set these policies up. So you need to work with somebody who gets the concept and who does this all day, every day, not somebody who's like, oh yeah, I've heard of that and I can do that for you and let me figure it out. Not the right person. Third, there's a long-term commitment, right? It's called a whole life policy. The concept is for your whole life. So you need to be able to maintain these premium payments for a minimum of 10 years, right? So if this is not something that you're going to be committing to for, I would say, at least 10 years and your entire life, don't do it. This is not a quick kind of thing where you can do this for a year or 2 or 3 and then get out. That would be a terrible idea. Your premium deposits need to remain consistent. So once you set these things up and you say, okay, I'm going to do this much per month or this much per year, that number, it needs to stay pretty consistent, right? It's not like, oh, I'm going to put a ton of money in this year and then no money in next year and then a ton of money in next year and no money in next year. It's something that needs to stay consistent. Like what I just talked about, you need to have a consistent cash flow and you need to be consistent. Let me say consistent 10 more times so that you understand how consistent this thing needs to be. There is big risk if you set up one of these policies and cancel early. So in the first few years, your cash value will probably be less than the total amount of premiums that you've paid. So when you cancel a policy early in year 1, 2, 3, 4, 5, I can guarantee that you will lose money. You will have put in more money into the policy than you will get out. So if there is a risk that you're going to be canceling this policy within the first few years of setting it up, don't set it up. I don't want to go through it. It's a pain for me to set this thing all up and then cancel it all. We should just not set it up in the first place. So again, you need the consistency of cash flow to be able to fund this policy over time, consistently for a long time. Interest rates can also affect this, right? Because the way that you're using the money is through a policy loan, which is subject to interest rates, which change over time, you need to be able to monitor the interest rates and borrow and pay back money into these policies while taking interest rates into consideration, right? So when interest rates are low or interest rates are high, how does that affect you? And then this comes up a lot, and you can actually search this on Google and come up with a ton of websites. But is infinite banking a scam? And does it work in Canada? So infinite banking in Canada is 100% legitimate when done correctly with the right advisor. However, there are financial advisors who misrepresent the strategy, which can lead to confusion or distrust. So you want to make sure that you're working with a qualified professional. So you want somebody who's officially licensed by the Nelson Nash Institute. So Nelson Nash was the guy who wrote the original book about infinite banking, and he created the Nelson Nash Institute, which certifies financial planners around the world on how to set these up. You can check out Safe Pacific. We're on the website. Go to the Nelson Nash Institute. It's at infinitebanking.org. And you can look up Safe Pacific and you can see that we are official. We were actually trained by Nelson Nash before he passed away. We've met him a few times and we've done tons of Zoom calls with him. And we understand the system. We understand the philosophy and the why you want to do this. This is something that the company was founded on. You know, we're not just here trying to do this once in a while. We do this all day, every day, and we've been doing it for more than a decade. So if you want to find a practitioner near you, if you don't necessarily want to work with us, that's fine. But you want to go to the infinitebanking.org website, and then you can look up your province or your state and see who in that area is official. A knowledgeable advisor is essential to setting up your policies properly. Another big question, can you access the cash value anytime? Answer, yes. You can access the cash value in your policy once it's been built up. However, rules vary depending on the insurance company you work with. So with some companies, you can do policy loans after the first 30 days. With others, you can do policy loans after the first 12 months. So when you're setting it up, you just want to know, when can you start doing policy loans? We work in the same way as the book recommends, in that you don't start taking policy loans immediately after you put cash in. You usually want to let your policy build up for a couple of years. So to maximize the results, we recommend like 18 months before you start taking your first policy loan. And this really allows the cash value to properly capitalize so that you can have a strong foundation for borrowing. I always use the analogy of planting a seed, and they use this in the book as well. You don't plant a seed today and then chop down a tree tomorrow. That doesn't work, right? You don't get fruit off the seed the minute that you put it into the dirt. You need to put it in and you need to let it grow before you can start to harvest the fruit. And if you do it in the right way, you can harvest that fruit forever, right? So you want to let it grow and give it a chance to develop. How do you get started? How do you get, starting the infinite banking policy? It requires guidance from a knowledgeable professional who understands your unique financial situation, right? So number one is you want to really understand your financial situation. You need to ensure that you have consistent cash flow and a strong savings habit. These are very important. Number two, you want to consult with a professional. So you want to work with an experienced advisor like us who will tell you yes or no if this is a good idea for you. We're pretty direct and very transparent in the way that we operate, and we will tell you if this is a bad idea for you. We will tell you. Nobody's going to try to sell you into something that's a bad idea. Again, like I said, this is something that you would set up for your whole life. But then on our end as the advisor, if you're going to be a client with us for 10 years, 20 years, 30 years, we want to also make sure that you're going to be a good client for 10 or 20 or 30 years. We're not trying to sign up bad clients because that would be a nightmare. So we will absolutely tell you if this is a bad idea for you. Number three is that you want to set up the policy. So the advisor will design a participating whole life insurance policy to maximize the cash value, especially maximize the cash value early, which is something that not all advisors know how to do. And then number four, again, I said commitment a lot of times in here. So you need to maintain regular premium payments, whether that's monthly or annually. You need to stay on top of interest rates, at least annually. And you need to stick with this strategy for the long term. If this is something that you're thinking about setting up today and canceling tomorrow or in a year or 2 years or 3 years, then my advice would be don't start at all. this is something that you need to start with the commitment, knowing going in that this is like 10 years as a minimum. If that scares you, again, don't start. So, is the infinite banking policy right for you? Well, I would say maybe, but it's definitely not right for everyone. But for those with the right financial foundation, it is a really powerful way to grow your wealth, to access tax-free capital, and to create a financial legacy. And if this is something that you want to explore more, the best way to do it is through our website. So you contact us at safepacific.com. On there, you'll find there's a lot of ways to contact us. So send us an email through the website. That'll come to me. Somebody on the team will reply to you within 24 hours and we'll set up a time to meet. Like I said, we have been building these plans for hundreds of Canadians over the last 14 years. And, maybe you're going to be one of those Canadians that we work for over the next few years. So please reach out and do that through the website. Actually, while you're here, if you got value from today's video, please do me a favor. This is a big favor that I'm asking. Hit like before you go. It's the little thumbs up that's underneath the video and tells the algorithm to share this video with more people that are just like you, so that we can spread this good, solid financial information to people across the internet and across Canada that desperately need it. Now that's it for me today. I will see you next time.